All right. Today we'll look at the possibility that the bears are in control of the S&P 500 because on Friday we did get a full pivot from the high, which means we now have a lower high and a lower low, and we did also close down below the daily 5 EMA. So if we go back to this very powerful bull run that started back here at the end of May, we have been closing over the daily 5 EMA every single day since that rally started, and we have not closed down below it until Friday. Now, as you can tell from my arrow, my speculation was that we would reject from 550 and come down to a gap fill at 537. And based on the recent price action, it is now only confirming that speculation because we officially have an objective pivot from the high, which was the high at 550. So when you get price action confirming your speculation, that only makes you more confident that this could play out. But I will warn you, even if we did start to bounce, it is possible a bounce to a lower high would still be another opportunity for a lower high rejection for this lower low. So even if we do get a little bit of a bounce early next week, just keep that in mind that if we do not break through 550, it's still possible the bears are in control. Now, I'm not saying we need to bounce to a lower high. It's possible we just go straight down, but you always need to be flexible and have a realistic expectation of how long it could take and what the price action could look like. So I don't want to change anything about my outlook. I still think we are going a bit lower before we can go any higher, and I do think that is a realistic expectation across all of the stocks moving the S&P 500 that just got a little bit too far overextended and are due for a pullback. So I'm not bearish in the sense that I think this is a market top and we're going through a major bear market or massive correction. I'm simply just thinking we need a little bit of a cool down before we can go any higher in this bull market. Remember one thing about bull markets, and I think Peter Lynch said this the best, that far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. Now, I don't think you can say anything more true than that because it is very true that traders either try to short the market too early when they think we're reaching a top and they lose money as the market continues to go higher and they're net short, or they sell their positions too early because they're worried about a correction and the market continues to rally higher without them. And then at some point they may even buy back into the market at a higher price and then lose money after the correction begins because they got scared out of their position and had to buy back higher. So do not think you need to do anything different with your trade plan just because I draw an arrow to the downside. I could be completely incorrect, and that's why I let the price action do all the talking. And I don't want you to think you have to short a bull market or you have to sell your long positions. If you are a long-term investor, this is a bull market and nobody is ever going to correctly call a top. And even if we do reach a correction, it's possible we just continue to go higher after that correction. So yes, I do think the bears are in control in the short term, but that doesn't mean they're going to stay in control. So just keep all of that in mind and never let anybody scare you out of your positions. I always suggest that you have a trade plan, and that trade plan, in my opinion, should depend on certain price action triggers. And that's why I always tell you if we break down below a support level where we are looking to go next. And I don't just say we have to go lower or we have to go higher, because if we are going to go higher, we are going to see the price breaking through resistance at 547. So in order to get more bullish that this is not a pullback that is going deeper, we will want to see price back above 547. And in order to get confirmation that we're going lower, we're going to want to break down below the support at 541, and that'll tell us we're going to the gap fill at 537. Now, if we do not hold 537 and we continue lower, that is going to start looking like a falling knife, and that means it will be more and more risky to try to catch a falling knife because buying the dip does not work well if we're going through a deep correction. So keep all of that in mind. I know that's a lot of information, but if trading was easy, everybody would be profitable, and I know the majority of traders are indeed losing money, especially the ones that have been bearish, going all the way back to last year when we had very powerful bull trends in this market. So don't buy into fear. Don't buy into anybody else's speculations or opinions. Have a trade plan based on the price action and then let the damn chart do all the talking. On the NASDAQ 100 triple Qs, we were down 0.27% on Friday. And just like SPY, we also did get a close down below the daily 5 EMA. And it is possible we are going to follow my arrow, but I do want to see a breakdown below Friday's low. Friday's low was just below 479, so I want to see a price action break down below 479. And then that will tell me below 479, we are very likely going to my price target projection at 468. But just like I told you on SPY, don't get shaken out if you are shorting if we get a bounce, because this bounce is likely just going to be another lower high before we go down and fill that gap. So keep that in mind. If we do bounce, we will need proof it is bullish by breaking above 484. But if we just simply get rejected from 484, it's very possible that's another lower high before the next lower low. Again, I may be incorrect about this prediction, but this is what I currently think is the highest probability based on everything that I know about the market and my own technical analysis. So I am expecting the Qs to go lower even if we get a short-term bounce, and that resistance I'm watching is 484 and the previous high right around 487. On the Dow Jones, we were down 0.19% on Friday, and this is getting very interesting because we are very close to regaining a bull trend the longer we can hold above 391, and these Bollinger Bands on this daily chart are squeezing very tightly, which not only is limiting the short-term upside, but it means a large move is coming to the Dow Jones, and we already know we have a possible head and shoulders on the daily chart if we break down below the neckline. And that is if we break down below the neckline, because a lot of bears constantly short head and shoulders patterns without waiting for confirmation that we got the lower low breakdown. So you will want to wait for a breakdown below 384 before you assume this is a head and shoulders. It is still possible above 391 that we are also putting in a higher low and a higher high breakout. So yes, the Dow Jones is very difficult to trade right now because there's two very valid patterns. The bull one because we got the break above 391 and it looks like a higher low, higher high. But the bears also have damn good reason to be bearish because we do have this huge head and shoulders that could break down at any moment. So watch the price very closely in the Dow with the critical levels being 384 and 391. On the Russell 2000 IWM ETF, we were up 0.23% on Friday, and we had a very bullish day of bouncing off of the lows and closing near the high of the day, and it was all on increasing volume. So I'm getting a lot more bullish on the small caps, but I do want to wait for one more confirmation of a higher high breakout above 202 to 203. I think if the bulls can break out of this range, which is currently slowly downtrending, it will look like a bull flag. And then I'm going to give you a very bullish projection that I think the IWM can start pushing as high as into the 220s, and I think it could go as high as 228. And I think that is going to unfold over the next quarter because with quad witching now behind us, it is very likely positioning is going to start rotating into small caps. And I do think there is a huge upside potential here for very little risk. And I'm giving you this as a trade idea free to you because I do want to help some of you out, especially if you're currently having a bad trading year. This could be where you make up some ground. So all you need to do here is manage risk down below this previous low right around 197. And as long as we can hold above that, it is possible you have a very low risk, high reward trade setup here. Now, we are still in a short-term downtrend, so do not just blindly assume this has to work out. If we do start to break down and we break down below 197, then this will obviously still look like a downtrend going lower, and that means we could go as low as 195 to 193. So yes, I do think the small caps will get a lot more money rotating into them in quarter three, but that is a speculation that has not yet been confirmed by the price action. On the RK ETF, we were down 0.12% on Friday, and I'm keeping it very simple here. We're risk off in a downtrend going lower while we're below 45, and we'll assess the bullish probabilities if we can get a bull breakout to a higher high. So while we're below 45, we're looking for support at 42.4 and 41. On the VIX, we were down 0.6% on Friday, and I still think the VIX is going to go higher while we get this little bit of a pullback to close the gaps on the daily chart, which I talked about when I looked at the analysis for SPY and the triple Qs. So just keep that in mind. I do think the VIX could go a bit higher to 15 to 18, and that is going to likely lead to a lot of volatility in the short term, but do wait for confirmation in the price, which is going to be a break above 13.5. On Bitcoin, we are currently trading at 64,000, and we are at the bounce or die support, which means if the bulls cannot hold 64,000, Bitcoin is likely going a lot lower, and that is easily going to push us down to 60,000 all the way down to about 58,000. So as you can see, this is a very important support right here at 64,000, and if that breaks, we're going to 60,000 next and then 58,000 below that. Now this is favoring the bears because this was a double top rejection, and I told you while we're below 67,000, it's a lot safer to just stay risk off, but this is also a no man's land between 64,000 and 67,000. So it's up to you to decide if you think this is worth the risk. It is at support, but if it breaks support, it will be going a lot lower. On Nvidia stock, we were down 3.22% on Friday, and this is one of those things I'm just going to continue to warn you that I do believe Nvidia is in a blow off top, which means it already likely did blow off the top when it got to 140. And one thing you need to understand about blow off tops is that they go down just as fast as they go up. So I do think Nvidia could be due for a very deep correction to shake out a lot of the late bulls who are buying way up here in the 130s and 140s. And then from here, I do think we could go as low as 116 to about 107. Now, that's not likely going to happen quickly, but it will happen relatively quickly to the speed that we went up. And that could mean this correction could be very sharp and only last a month or two. So just be very careful here. We did break down below that risk level I gave you at 131. So I do think it's worth being risk off below 131. And as I warned before, even if we do start to get a bounce, it is very likely these bounces could be lower highs before we just continue to flush lower and get more lower lows. So don't think just because because we're bouncing that it's incredibly bullish. We could just get rejected right around the low 130s and then continue lower yet again. While we're trading down here, your next critical support is 126, and if that breaks, we're likely going down towards 117. On Tesla stock, we were up 0.79% on Friday, and we are very close to getting a bull breakout here. We have higher lows and higher highs. We just need to get one more break above 187, and that could be the break that sends this bull trend into a nice, very powerful bull rally to take us up to that price target right around 207. And this is simple as just staying bullish while we can hold above this bull breakout and support zone right around 178 to 177. If we break down below that support, I would get more risk off because it could be that we are going to get a lower high rejection back into a bear trend. But right now you can clearly see we're in a bull trend and it's low risk to stay bullish above 178. On Apple stock, we were down 1.04% on Friday, and Apple is continuing what I told you, which was a double top rejection off of 218, which meant it was likely going to 207 and then 204, and then below that we can go to 198. And this is a risk off look below 212, so I would not be getting bullish while we're below 212. So jumping back over to the S&P 500, keep in mind what I told you about corrections. That Peter Lynch quote that far more money is lost waiting for corrections or planning for corrections than actually in the correction itself. So if you are freaking out about a correction, just remember that in a bull market, corrections are typically the best buying opportunities, and they are going to be the next higher low before the next higher high. This is still a bull market, and I think it's going to remain a bull market for quite a bit longer, which should take us all the way out into next year. But that doesn't mean we won't get a correction along the way. It simply means that if we get a correction, I'm going to be viewing those as buying opportunities for longer term swing trades. So have a plan, understand a realistic expectation, and right now I think the best probability is we are going to go a bit lower in this pullback, but then after that pullback is over, I do believe the bull market will resume and we will continue to go higher. So again, these are all speculations. Always have a plan around price action, manage your risk around the critical levels, and follow your trade plan with objective price action analysis instead of just following a speculation or somebody's opinion or idea. It's okay to have opinions, it's okay to have ideas, but it's not okay to ignore price action on the chart. And right now the price action on the chart is telling us we are pivoting from a high and could be going a bit lower. Doesn't mean it's going to be right, but that's a good probability right now. So have realistic expectations and make sure you're managing risk accordingly. If you want access to all of my technical analysis, intraday updates, and my trade ideas, that's in my Discord server. And you can find out how to join my Discord server by clicking on the link that I'll put in the description of this video. You can also find that link in the comments below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.